How do you make money on a duplex? How does that happen? We just talked about how you pay for a duplex, but now the question is, how do you make money on it? Anyways, we're in a business class, and so we should always be talking about making money. How do you make money on a duplex? Well, there's two types of money you can make. There is the monthly profit that you can get from your rent, and then there's the house appreciation over time. We're going to dig into both of these right now, and you're going to kind of figure out how you make money on a duplex. Whenever we're talking about business, when we say make money, we say make profit. Another way to say it is that's your profit. We have income, that's the money that your business brings in. But then look at this, we have a bunch of expenses that you have to pay out. So to get to your profit, we have to take your income, the money you're bringing in, and then we have to minus out all your expenses. What you're left over with is called your profit. And so let's go see what that's going to look like. Well, we know that this family, in my case, your case is going to be different, but in my case, this family right here is going to be giving me $2,000 a month to live in my property. So that's my income. That's how much money I'm bringing in per month. So per month, okay? But I also have expenses per month, right? So every month, I'm going to have some expenses. We already know one of them. I'm going to have to pay the bank, but there's many more. Let's go check out some of these other expenses. Obviously, I got to pay the bank back. And remember, for my case, it was $3,200 a month. But look at all these other expenses. I got property tax. This goes to the government. I have insurance. This goes to the insurance company. I have utilities. This goes to heating, water and sewer, all these places that allow me to kind of run my house. We have savings accounts that we have to put our money in, and I'll explain those in just a second. And then you can rent a property management company to do a lot of the work for you, and that comes with a monthly expense. Once you have all these expenses figured out, you add them all up, and then this would be your total monthly expenses. So that would go like right here. So let's say that was, I don't know, like $4,200 per month. So your income in this case would be $2,000. Your expenses are $4,200. Now you are at a negative of $2,000. Your profit is negative $2,800 or $1,800 per month. Oh, that's interesting. What do you think about a negative profit? That in business we usually say that's not good, right? Because you don't want to make a negative profit. But in this case, I'm sorry, it'd be 2,200. So all I did was take this and minus this, and what I get is negative 2,200. And again, in business, that's not a good thing. You don't want a negative profit. But when you're house hacking, it actually kind of makes sense. In other words, they're going to pay $2,000, and you are going to pay. You're going to live up here, and you're going to pay $2,200 to live here. So that it's like your monthly rent bill, but it goes to paying for this whole property. Okay, so let's go look at what that looks like in the worksheet. We're going to come down to this sheet right here. It says, your monthly expenses. You're going to try to figure out how much of a monthly mortgage you have to pay the bank every month based on this table. So for instance, if this number right here, let's say this number was $275,000, that's how much loan you need to take out from the bank. You're going to come down to this table here and try to figure out where that fits. Now, I don't see $275,000 here. But I do see that it fits between these numbers here. So this is the monthly payment for each of these. So all you're going to do is kind of approximate in between it. $1,500 to $1,800. I would probably guess this to be in between these numbers, 15 to 18. So probably $1,650 is kind of the middle of these two, because this number kind of fits in between these numbers. So you're going to try to this. In other words, this is how much I got to pay the bank every month if I'm loaning this much from them. All right. Well, hey, my property taxes. I'm just going to give that to you. That's going to be about $400 a month. So $400 a month. Your insurance is going to be about $175 a month. Now, these ones are interesting. All of these here are your utilities. And what makes these interesting is you can choose to pay them, or you can have your renters pay them. So for instance, water, sewer, trash, and recycling, that usually costs about $50 a month. You can either say, hey, my renters are going to pay those, or I'm going to pay it. Okay? Same for electricity, heating, internet and cable. So you're going to come down and choose which ones you're going to pay for and which ones your renters are going to pay for. Hey, now we get into that savings account. We're going to put away $300 a month into a savings account called maintenance and repair. Now, why would we do that? Think about this. Think about 2 years from now, your house needs a new roof and it's going to cost about $13,000. Wouldn't it be nice if you just had a bunch of money tucked aside for you to build that new roof? Well, that's what this is right here, maintenance and repairs. You're going to tuck this money away, and you're going to have it when you need it. Hey, same thing for vacancy costs. Vacancy costs are when you don't have any renters. So let's say you have a renter for 2 years, and then they move out, and it takes you about a month to get the property fixed and out on the market and get someone renting it. Well, guess what? You're not going to have any income during that month. And so we're going to save for that. This is going to be a savings account called vacancy, and you're going to save about $125 a month. And guess what? When you don't have renters, you're just going to go to that savings account and pull that money out. It's not going to hurt you at all. Hey, the last one is this one. You're going to choose, you're going to have a rental property, a management company come in and kind of manage your property for you. It costs about $100 a month, and they take your payments. They deal with a whole bunch of stuff that you don't want to have to deal with. So it's a pretty good deal, about $100 a month. And the second one is you're going to have that rental company, that property management company, find you renters. Wow. And it's going to cost you about 1 month's rent for them to find you renters. So you're going to, let's say you determine, let's say that your rent was, $1,250. In other words, that's how much you're renting. That's how much your tenants or your renters are paying you every month. You're going to pay that once to the rental company, to the management company. So that's an expense. Hey, what you're going to do now is you're going to add up all these numbers here, except for the one the renters are paying, and you're going to put that right here. That's how much your monthly expenses are going to be for owning this property. You're also going to scroll down or go down on your packet, and you're going to write that number right here. So let's say that, for instance, you added this all up and it came up to, like $4,000. I want you to write that there, but I also want you to come down to here, total monthly expenses, and I want you to write it here. So that's it. We're trying to determine what your monthly expenses are going to be to run this property, because guess what? We're trying to get to our profit, and we need to know this number right here.